All right, folks. Welcome back. Welcome back to the show. I'm your host, The Wolf of Crypto. You guys are tuned in to another episode of the Wolf of Crypto podcast show. Got a very special guest here, Janna Scott. She is the founder and creator of DeFiTax, and I think we're in that season. You might want to stay tuned, stick around to what she has to say about DeFiTax. And off the bat, Yana, what inspired you to create DeFiTax, and what were some of the initial problems that you were trying to solve?
I never actually meant to create DeFiTax. I didn't want to. What I wanted to do is fix the issue and hand it over to the people, to the adults. No. So after years of working in public accounting and tax, I switched over to the government sector, worked in the government, worked my way up, realized very quickly not the place for me. I like to actually help people. So I went back into working with the public in the capacity of helping with their taxes, resolving issues with the IRS, state agencies. And that's where I had clients approach me and said, how do I report my taxes? And while I've been trading myself for years,
Mhm.
I said, I have absolutely no idea. That's a really good question, though, considering I should have thought of this. Yeah. So I went ahead and I took a little wallet I had that had about 300 transactions between 17 and 22. And I took that and I sat down and found the 14 products that are on the market worldwide, not just in the US, and I connected that same set of data, so the wallet, to each of the products. And I expected to see somewhat consistencies. 1 + 1 is 2. FIFO, LIFO, FIFO algorithm should always be the same. But to my surprise, every single product gave me a different capital gain, different income number. And not just here a couple cents. No, variations for up to 20%. And one of the major examples I'll give you in a little bit. Unbelievable. And so my question was, is this happening? So I went ahead and I pulled the raw data from, apologize for that, my phone tells me. So I pulled the raw data from all the products that I was using. And then I went and built an API to pull the raw data directly from the blockchain. So I can see both sides. I can see what the actual clean raw data is, and I can see what the products with that raw data. And then I went into doing some math and figuring it out myself, reviewing all the cost accounting methods, reviewing how it's done in stock trade because it is considered an asset, reviewing how it is going to be what the IRS already has out as regulations at that point, because we're like 3.5 years past. And it took me about a year, but I figured out every single product's issues, where it's coming from, whether it's coming from the internal code, whether it's coming from the way they pull data, whether it's coming from the actual math. And at that point, I went ahead and I went and approached these products and I said, hey, I have this data. I have the proof. I have from your own websites, from your own software. I found your mistakes. I want to give them to you. I don't want any money. Just take the research and correct it.
Mhm.
90% said, no, thanks, not our problem. We don't care. 10% met with us and tried to sell us their product instead of listening to the issue that we're and the issues we found. So I said, you know what? Fine then. In that same time frame, the SEC got wind of my research. We had, in the beginning of 23, we had a long meeting with about 50 of the division chiefs to discuss our findings and our research. And their response was, oh crap. But, right? Because they said, we do not regulate crypto. We can regulate the financial products for crypto either, especially the tax, right? So they said, let's get you over to the IRS and let's get you over to the congressional committees. So that was a fun conversation with the IRS.
I can imagine.
We met with the heads of the crypto audit divisions and we presented all of our findings and the issues we found and what makes it so inaccurate. And the goal of that was mainly do not do crypto audits or do not penalize payers if they're reporting incorrectly, because there's nothing out there that can actually give them the correct answer. You can't penalize them if there's no way for them to do it. In that whole, but what ended up happening is We proved that the IRS internal audit processes to do crypto audits is highly flawed, and they stopped their crypto audit.
Whoa.
So now we're getting to the next point. Okay, within that, we were meeting with congressional committees and the university, and multiple universities actually work with the IRS and going and working and has worked with them on crypto reporting, crypto in general, and just accounting efforts because they work with the IRS and congressional committees. So we actually got in contact with those universities. We were put in contact with those universities. These universities reviewed all my research, every single detail. It took them about 18 months or so. Reviewed all my research and my data, and it is currently being published, and it's been validated. My algorithms, my math, my structure, everything has been validated. It is currently being published. We're about 2 or 3 weeks away, I think, from it being published. However, I have an NDA in place. They're not allowed to publish it to the public because I offered all the products, the details on how to fix it. Now, since they didn't want to, and I built my own, I'm not going to give them a roadmap on how to fix their product. Okay? Because I want to make sure that this is right. And in 24, actually, the university called me and said, hey, we used your research to tell the IRS they need to not start audits again because they were planning on starting audits again in 2024. Yay. We've been putting it off. And now we're here. We're close to launch, almost done. We could have launched already, but I'm picky because I can't go out there and say, hey, these are the issues, and then I'm going to come out with a product that has the same issues. Right. So I need to actually put my money where my mouth is.
Right. And with crypto, especially what all the transactions depend on where you're actually at base. We're talking about a lot of transactions because you look at the DeFi world and liquidity pools and staking. You got airdrops. Obviously, you got trading.
Mining,
You got
minting,
swapping, mining.
Yeah.
So with all that, it's like how, and it's cool that you were able to give some of that inside information because a lot of times when they say, oh, we should report your crypto, it's like, how? Because I have a ton of transactions and you don't really know which ones are, I guess, your quote unquote.
That's why you would use those products on them. But this is the issue. And this is the example I was talking about. Now, I'll show it to you off. I can't really show it off on recording because then my attorneys told me to be careful. So no, but this is the thing. So there's two main products that pretty much almost everybody uses and endorsed by the two top other products out there.
Mhm.
And this is like my biggest example. I took for 23, I took my wallet again, ran it through them. The one product, multi-billion-dollar product, acts like it knows everything and is the best.
Mhm.
Connected it to that, then used the same exact. I think at this point I had maybe 400 transactions because I kept trading to get more data going for every year. And I connected it to the other product as well. Those two top products. The first product tells me I have capital gains of $24,000 and income of $25,000, which would be fine. The other product tells me I have a loss of $351 in no income on the exact same set of transactions.
A huge difference.
So one, and they're both wrong too, by the way. But one, I severely underpay if I use their reports, and the other one, I severely overpay. Okay. So listen, I'm all for saving taxes, and that's how we built DeFiTax. We actually, yes, it is for you to capture all your crypto and be able to have accurate reporting. But we have things built in that are actually much more beneficial and give you a bigger understanding of what is actually going on. And we can get into that as well. And I don't know if you have a time constraint because I can keep talking about this. There's a lot to say and there's a lot I'm excited about because it was draining to do this. I didn't realize how exhausting it would be to build a product like this. And I have another company, Taxation. Here we go. It was hard. And I relied on a lot of good people, a lot of smart people, a lot of people putting in their time and efforts, me putting in my time and efforts. We have not done any like some of these other companies. They've raised 10, 15, 20, $100 million. And they're worth billions. And I refuse to do, maybe that's why I'm slow at getting it done. But I refuse to do, this is self-funded. I've had some help from friends and family who wanted to help, but I've mainly just had people who believed in what we're doing come in and say, I would like to help you. I would like to give you my time. And so we've become a big group of people. There's not just one person, and we are a group of people who have put our heads together and cleaned this up and come up with something that is straight up. We have met with tax attorneys, PhDs from different universities and validate. But this is about doing it right, doing what's best for the taxpayer. Because, and this gets us to the biggest issue. There's really two issues. And I don't know if you know this. If you Google, for example, let's see, you Google IRS crypto John Doe letters, okay? Gets you to the Justice Department website. The IRS sent out 1,000 John Doe letters. What that means is a judge signed off that any exchange product, whether it's MoonPay, anything where you have to verify your identity, KYC, okay, had to give the IRS the information of all U.S. citizens, residents. The IRS knows you've touched it. Doesn't matter if you didn't touch it, and if you touched it 5, 6, 7 years ago and you have never touched it again. They don't know that part. They know you touched crypto. It doesn't matter if you hold it on a cold wallet, hardware wallet. They know you've bought it. You sell it, you have to use something with KYC. Buy it, you have to use something with KYC. You have it.
Whoa.
It's there online. Google it. And this is the issue. This is the problem. They've also partnered, Google this as well. Government contracts that Chainalysis holds. Biggest contract is with the IRS. Chainalysis is helping the IRS trace crypto for people who are trying to hide their asset tax evasion.
Oh, man. That hurts right now.
Do you see what I'm saying, though? There's a lot of, I've heard it so many times. People say, oh, no, I have it in my cold wallet. I have it in my ledger. It doesn't matter. You had to buy it and you had to sell. You had to, if you sold anything, you had to use a KYC.
So basically, because there's so many platforms, I would say obviously in America, that you have to have KYC. So I guess the other platforms where you don't necessarily have to put that in, would you quote unquote say you're, I guess, not being watched?
Yeah, the non-KYC ones, you're not really being watched, but they have made it so much. And I know this for a fact because I signed up for every single one that I could sign up for. Even the ones that are no longer allowed in the US, I have family in Germany and other countries where I said, hey, can you please sign up for this? Because the problem is, as soon as they recognize you have an American bank account or you have things like that, you can't move forward anymore. You know what I mean? They stop you because the US has shut out so many of the easy and non-KYC exchanges that it just is what it is. And yeah, they might not catch you on everything. They might not, especially if you got it sent or something like that. But Chainalysis is good at what they do. They are. They've had a couple of seizures that they helped, I think maybe Homeland Security, FBI, Secret Service, whoever does this with. They're not bad. But the reason I'm pointing this out, because I hear a lot of people getting excited with having a crypto-friendly president. And having a crypto-friendly president is great. However, no, the IRS is not going to be about it. We need the IRS. We have none of the congressmen and senators would want pay to be cut because we have no more taxes, right? We have a military to support. There's a lot of other things that have to be done. But ultimately, still, even if Donald Trump says crypto is no longer be taxed on capital gains, it's considered a currency, or we're just going to have tariffs on it, whatever it is, that is something that can be implemented moving forward, but it cannot be implemented moving. Now, in the 2022 publication that the IRS came out with, 24, last year's publication, they said that they're looking at about replacing a third of their budget using the crypto audit income, pretty much, right? Taxes, penalties, interest. Do you know what their 2024 budget was?
No.
$2.2 trillion.
Did you say 2.2 trillion?
And they're looking to use the crypto audits to replace a third.
Wow.
So now this is the issue, okay? This is the issue we're running into. And this is why I built this, and this is why I've been very quiet. I've not made any, I just want to fix it. I don't want fame. I don't want glory. I don't want to be out there. Didn't even want to do podcasts. I tried to get my business partner to do it, but she said, I can't answer any of the questions you can answer. So I said, I like this makes sense to me. I do it because I want to fix it. All my clients will tell you, all I care about is making sure everybody's treated fair.
Mm-hmm.
But this is the problem. There's multiple problems. Again, the main issue I have is if you get audited, okay? And we try to answer that too. If you get audited, who do you go to that can help you in an audit?
Right.
Because these products out there have features that will make it immediately a not audit ready product. The reports are not going to be locked by the IRS, none of them. Because the same with if you're a business owner and you use QuickBooks for bookkeeping and you get audited and you say, here, IRS is my QuickBooks reports and general ledger. They say, no, thanks.
Mm-hmm.
You can manipulate the numbers within that product. Okay. And that is the same issue with any of the products on the market. You can edit a transaction. You can delete a transaction. You can edit it to a degree of, you can change the date. You can change the basis. You can change the currency. You can change it. And that is, what's the blockchain known for? You can't change anything.
Yeah.
Once it happens, you can't recall it. You can't do anything about it. So that's one of the issues and so the reports are not reliable because you don't know what somebody did. Now, we went ahead and also audited 53 crypto tax experts on the market. Law firms, CPA firms, people you can find on Instagram who yell, I'm a crypto tax expert. We went to all of them, gave them our data, paid them $3,000-$4,000 or more, okay, which is absolutely ludicrous anyways. And they came back. And you want to know the fun part? The data that they came back, because we'd audited all the products on the market, we had the data and knew what it looked like. They gave us the data beds. Unlike a spreadsheet they put together, data thrown on there, gave it back to us and it matched certain products. So they spent $100, took our data, threw it in there, gave it back to us and said, oh, look, we did it manually. This is the right number.
Whoa.
Legitimate companies out there. So now please tell me, if the IRS comes and audits you, say the IRS managed to get it all completely right, not like in 23, let's say they fixed it, right? And they come back to you and they say, okay, we audited you, you owe this much. Who do you get to defend you? Who do you get? Okay. There's either people are going to try to use the products and the IRS says, no thanks, not reliable. And then you're stuck with the penalties and interest, etc., and the tax. But let's say the IRS still doesn't have it. Who is going to defend you? What if the IRS works like product A, told me I have $24,000 in gains and $25,000 of income, when in reality that is completely inaccurate? What if they operate like that product? Because they're known to use vendors in that. What is it they use one of the products because it is endorsed by some of the bigger exchanges on the market, because it is a multi-billion-dollar product, but they didn't look closely to it because the IRS in 21 already had a contract with one of the products and no longer because we could prove that product was completely inaccurate.
That's going to cause chaos because I know somebody got like a heavy tax bill and then all of a sudden they come to somebody like you and they say, hey, can you defend me? Or can you just make sure that all this data is correct? And then if it's not correct, then it's okay. Am I in a position now to quote unquote sue the IRS to try to get that?
The IRS will just put their foot down. You can try taking them to tax court, but you have to know somebody who can actually put together the algorithms and math to show why their calculations on your 20,000 transactions is wrong and why yours is right. Okay. And that's exactly the conversations we've had with them. And I think I made them mad at times because I don't have a filter really. Like anyways, different story. I drive my business partner. But see, the problem we're running into is They can very clearly say that everything on the market is inaccurate. You have the burden of proof to show that they are wrong. They do not have the burden of proof to show you that they are right. You have the burden of proof to show that they are wrong. And that is going to be absolutely impossible. Okay. And that's why we build our product. Multiple reasons, right? We have all of our algorithms and math and everything validated and researched and reviewed by universities that work with the IRS. We're having everything is being published to the regulatory committees, and the IRS already knows that I've got it right. Okay. Now I have absolutely because this product is not built by coders. This product is built by tax professionals. And that is one of the main issues that all these products have in common. They were built by coders, not by tax professionals. When I started working with coders, they kept telling me, and software developers, etc., when I told them what I wanted, they kept saying, oh, there's an easier way to do it without so many steps in between. And I said, that's exactly why the other products are wrong. You missed important steps. Crypto is not that simple. It is not that simple. There's multiple steps involved. There's things you have to consider that are completely missed in all of these other products. And again, I can go into all the details of what is being missed. I can get technical. I can try it in layman's terms. It's significant. And so we built in every single fail-safe. Okay. But then our product lacks features. We do not give you the option to edit the date and timestamp of a crypto transaction. We don't let you edit the type of currency that you traded because, I'm sorry, it's just ludicrous. I don't allow you to edit the quantity or spot price of a trade. No. Okay.
Right.
There's certain classifications that you can do, such as if you had a buy, if it didn't come, some of the wallets and exchanges, they don't bring over when it's a minted. They call it a buy or deposit. So you're allowed to change the categorization to an NFT if it is an NFT because it's a different asset category, certain things like that. Then we have automatic self-transfers because self-transfers are non-taxable. If you send something from your checking to your saving, you don't pay tax. Okay? If you send something from Coinbase to Kraken, you don't pay tax. So we have that built in, but only if we have your Kraken wallet. Let's say you send something from Coinbase to Kraken and you say, oh no, this wasn't actually a send where I have a taxable event happening. It went to me personally just on another exchange. We say, okay, we need to connect that exchange so we can match it before we tell you that this is not a taxable event. So we have a lot of fail-safes built in that will not allow people to intentionally or unintentionally commit fraud and give a full and comprehensive report with the date and timestamps, with the data directly from the blockchain to any IRS, with the algorithms, with how it was disposed, what's the disposal database, all the details to the IRS to validate we're right, they're wrong, or right, they figured it out. Who knows? Either way, but we can validate it. But also, because we are tax professionals, we have our licenses, we're tax attorneys, we're a group of all people who are licensed to represent you in front of the IRS, we can, okay? We don't just say, oh, there's some tax professionals you can work with. They use my product that is completely inaccurate. They can help you, defend you, but they don't understand how crypto is calculated themselves. So we can actually defend you, and we have audit protection that we have in place that can be, especially for the high level traders, that can be purchased. So there's lots of different things that can be done.
Is that me?
I think so.
I'll edit that out.
And so one thing that we put into our products, there's a couple things that I'm actually really happy with, aside from the accurate algorithms. And what I really like, all these products out there, if you want to toggle between different accounting methods, you have to always go to settings, toggle it off, and then it recalculates everything. And you can only see one at a time. I have it actually put together to a degree that you can see all the different, have a comparison. So on your reports page, you can compare and you can pick and you can choose what's the best one. And you can actually see it in real time. So you know what is the best option for you without having to recalculate everything. And then we have a couple of what's called what if analysis. So for example, I have a lot of clients that come to me and they say, I want to sell Bitcoin. What's going to be my damage tax-wise? And so if everything is connected that you own, all your wallets, all your exchanges, you put in, you want to sell a Bitcoin. And we say, if you sell it out of Coinbase, this is your damage. If you sell it out of Kraken, this is your damage. If you sell it from your MetaMask, this is your damage. But how about this? Sell half of a Bitcoin out of Coinbase and half of one out of MetaMask. And all of a sudden your damage is close to zero because that's the goal. You want to be as close to the lowest capital gain and the lowest loss. Okay. You want to be as close to zero as possible. Unless, of course, you have a lot of capital gains from other endeavors, stock trades, whatever it is. Yes, you want to maximize your losses to offset. Right? But in a normal day, we want to be as close to zero as possible because even if you have a $50,000 loss and you have no other gains, you only get to use $3,000 of that every year until it's gone. You're capped at $3,000 loss. The rest doesn't do you any good.
Okay. What does, I guess, because there's so much that goes into it, what does a audit-ready crypto report even look like? Because not to mention you got ways you can bridge your tokens. There's just so much
Listen,
involved.
from a tax perspective, okay, from a tax perspective, there's only a few different taxable events, okay? Bridging, trading, selling, sending, they all generate capital gains. It's all disposals. Okay? Bridging from a taxable standpoint is treated like a regular trade from a tax perspective. Okay. So if you send something to somebody else, you generate a capital gain. You bought something for $5, you send something and it's worth $10, you have $5 in gain. Okay? Same with a trade. You buy something for $5 Bitcoin and you trade it to Ethereum. And for $10 off Ethereum, you have a $5 gain. Okay? Same with bridging. It doesn't matter what networks you bridge around. The initial bridging is what's caused it, then further down the line. So that does not matter. It doesn't matter. Okay. DeFi, a lot of it is interest income, liquidity pools. A lot of it is interest income. That's just regular, ordinary income. It's passive income, but it's just income. And then if you receive something, let's say I pay you, that's income and not a capital gains event. And then obviously if you sell it, capital gains event. Right. And then minting is income. Mining is income. Minting is nothing until it is something. So let's say you bought $5 worth of Ethereum and then it grew to $10 and you minted $10 NFT. You do it for $5 gain there, right? But you keep that NFT going and now it grows to $50, right? Like you don't have a taxable event until you actually sell that full NFT, right? Or dispose of. So it doesn't matter what you call it, all the different things. There's only three. There's a capital gain, there's a capital loss, and there's income, right? That's it. There's only those types of taxable events. So yes, trust me, I've done all of them. I had to in order to see what it looks like on the back end and the raw data. But there's just certain things that can happen, not more, not less.
And because I know, I think might be Coin Tracker. Because I want to say I had tried it and just tried to hook up APIs. And then you're looking at it, you're like, this doesn't seem right. And I know there's probably some people out there that probably don't even file their crypto taxes just based on their situation. Or they just maybe don't care. And I know there are people that rely on automation. So it seems like to me, what you built just kills all those other problems and gives us pretty much a close to accurate report where you could feel confident sending it to the IRS. Because I think that's another thing that's like a barrier for some people is because, okay, if I do file my crypto tax to IRS and I send it, and if it really is wrong, like, what if they come get me? Like, you don't want those other problems to happen. So I just feel like what you've been explaining and telling about your product, it seems like there's gonna be other people that are gonna try to copy your blueprint because you said earlier, there's a lot of products that I probably can't even name. You probably can name some of them that are just really kind of in a sense tricking people.
Yeah. And the sad part is that those products are multi-billion-dollar products who have the resources to get it right. And they don't care enough to do. That's the sad part because, like I said, I didn't plan on building. I didn't want to. I got the research. I spent a year on it. I was willing to give it away. I have all the emails to them. I have all the responses to them. But, that's a me problem. I just think, I think forward, right? And I think what will happen to the people who are using those products and that really, it upset me. And that's one of the reasons I couldn't work for the government, right? Because I couldn't be the person that is trying to play those games with people's lives, right? I just sit behind a phone and it's just not, it's unfair. And I don't,
Right.
and don't get me wrong, I'm all for paying taxes, the right amount of taxes. I know we need our military, which is paid by taxes, right? We need our roads done. We need, we need our police. We need our firefighters. We need those things. I'm all for paying taxes. But I'm not okay with, and this is the frustrating, the SEC and IRS knows that these products are wrong. They have all the proof that and they have not said a word about it. Right. So they have for the last few years, still let people report. And then in 21, when they put that little button on the tax return that says, did you buy or sell crypto, the digital assets this year? But that's a little trick from them because if you say no, and it automatically selects no if you don't select anything at all. If you select no, and they got the John Doe letter back with your name, and you read the little fine print under your signature on the tax return, now you committed perjury.
Oh,
It says
man.
it. But this is the other thing. The issue is those audit letters are going to go out, and they got to threaten, big threatening. And listen, it's not going to happen. It's not going to happen. The threats are, if you commit tax evasion, you can face up to 3 years in prison and a $250,000 fine. It's written in the code. Now, is that fair? Listen, because nobody could do it. And do you really think any of these products will go to bat? They're multi-billion-dollar products. They didn't even care about getting it right in the first place. And two of the top products, both of them, are endorsed by Coinbase and MetaMask. Coinbase and MetaMask didn't do their math, didn't do their homework either, because those are the two products that I told you about with my 24,000 in gains, 25,000 income, and the other one says 350 in losses and no income. How can you endorse two products that are so vastly different?
Oh, man.
You know what I mean? It's just everyone is being set up to fail, and none of the products are going to go to bat for you if their reports are wrong. Do you think they're going to go? No. They actually, in 2023, they made internal changes to their algorithm. So if you used any of the products to file your 22 or prior year returns, go back, look at your 22 reports and prior reports again. Because if you pulled that before October 2023, they made algorithm changes. Now it looks different. Now there's a 20 to 30% variance from what they gave you in those previous tax years. And they did not send out one notification to any of their users saying, hey, we made changes. You might want to fix your report. You might want to fix your return. You might want to review it.
So, do you think government regulations on crypto taxation will become stricter in the near future?
I think so. They're fighting over it, right? Somebody is going to get it. The U.S. government has had a project going. It's called Project Cedar, like the tree. And that's actually been going on for quite some time. And it's them putting out the U.S.'s own cryptocurrency, the government's cryptocurrency. And so in order to do that, they will have to have regulations over it. Now, the question is, who is going to get it?
Mhm.
SEC, commodities, who knows? I think the SEC. Who is going to get it? Or are they going to classify it as a currency in general? Honestly, I don't know. I couldn't even guess because I thought the SEC would have already received oversight. I'm surprised that they haven't. Who knows?
Now, as far as DeFiTax, do you guys provide audit protection services? So, okay,
We do.
okay.
We do two things. Okay. We will be meeting once the publication is out, we're going to be meeting with the government agencies again, and we will discuss certain things that we could talk about some other time once they've been discussed. But this is the key to it, right? So Yes, we have audit protection. Okay. And that obviously it does come at an additional cost. But that is for specifically audits. Okay. And this is more for people who have a lot of crypto and who really want businesses that utilize crypto within their business, because we want to make sure that's for people who really would get hit hard. Okay. Ultimately, it is still significantly cheaper than if you go to any firm out there and say, I'm being audited on crypto for 2-3 years, you will most definitely get hit with a $5,000 to $10,000 bill. Okay. So we're still a lot cheaper because it's easy for us to produce if we get a power of attorney for you for the IRS, we call them and say, hey, here's the report. We can go by it line item for line item, and we'll have people for that. Won't always be me, even though I have fun doing that. We can justify everything. And so the normal reports that everybody gets, okay, obviously does not include our internal algorithms. It includes exactly the calculations, what was disposed of. You will see the disposals, and you will see what is now out of circulation. And in order to do that, so if you sign on to any of the products and you say you've signed on for the first time ever to this product, maybe used a different one in the past, sign on to this and you log in and you say, I want to now get a report for 2024. They do not ask you, what did you do in prior years? What calculation method did you use in prior years? Close out your prior year reports first. They don't say that. And that is a big issue because let's say in prior years you used FIFO, and then this year you want to use FIFO, first in, first out. It is now grabbing transactions that you already used in prior years, and it's double tap dipping. Okay. So you see how many little details have to go into figuring out what the issues are and why things are so off.
Yeah, because it's very it's complex.
It is.
And
And so we have thought of all the little tiny tidbits that will throw you off in the long and so we have built in fail-safe to make sure that everything is going to be as clean as possible. And we can give because you cannot calculate 2024 without calculating, let's say you've traded since 17. You cannot calculate 24 unless you calculated 17, 18, 19, 21, 22, and 23. There's no way you can just do 1 year because you don't know if there's something in there that you've held since 23 or since 21 that is still available for you to dispose of, or what was disposed of in prior years. So you have to start at the beginning. You can never just start in the middle. And that's another issue that all the products are missing out on. They're just starting wherever you come in.
I have actually a good example for something like that because I'm not sure if you heard of the token Pi. It's the mining little app on your phone, and they just came on the mainnet. So everybody just got their tokens. So for that event, which is basically 6 years, and all of a sudden somebody wants to, I know people already did it. They sold probably for 5-6 figures. I'm assuming that's going to be a taxable event, right?
That's going to be a very taxable event that is depending on what they spent when they first received it, when they first invested in it. That's their basis.
Wow. Is there anything else that crypto investors should know when it comes to IRS audits? I know you hit on a lot of different points. Is there anything else that might want to be cautious of that they're thinking right now? Oh man.
I don't follow. Let me give you an example as to why I'm saying this. Don't go to the loudest screaming, I'm the best in the crypto tax expert, CPA, law firm, etc. Please don't. I've worked with a lot of crypto tax attorneys, expert attorneys, crypto tax expert CPAs. We've audited them literally all. And they didn't know they were audited, right? We just went there and said, here's our data, please give us back something. And they charged absolutely insane. Don't do what the people during COVID, when we had the ERC credits, the employee retention credit. All these companies got calls. All these business owners got calls from these companies saying, we can get you hundreds of thousands of dollars back in the ERC tax credits, and we'll file your 1090, your 941 amendments. And they did. And the IRS went ahead and paid it all out because it was a panic mode. They wanted to make sure everybody survived. and sent out these billions of dollars in fraudulent money. And these companies all took 25%. And now the IRS is coming back and saying, fraudulent report, we paid you too fast without looking, pay us. And that's the same thing that's going to happen. So be careful, do your research, okay? Find somebody who says, I don't know everything, but I'm going to do my best. Don't find the one that goes out there and screams, I know everything, okay? I've found too many of these people who, like I said, I stay off of social media. I don't do this. I have a lot of clients say, oh, you should add, you should make reels and all this. I don't understand the people that go out there and say, I'm the best. I can get you the best refund. I can get you through any. I can't guarantee that. Nobody can guarantee that, right? Especially if you don't know the situation. If you did something bad, I can't get you through an audit. Never can, never will. If you did, it's just the case. So do your research, watch, and maybe even right now, do the comparison of the products. 3-4 products, take a little under 100 transaction wallet, run it through and see the differences. Do your research and compare them. It's just difficult. And the other thing is too, what everybody has to watch out for is the IRS is looking at requiring the exchanges to give out 1099 DAs, 1099 digital asset forms, right? Like the broker forms you would get. But do you think that, let's say Coinbase would communicate with MetaMask, or Coinbase would communicate with Kraken, or Gemini communicates with Robinhood on your behalf? No. So this is going to be the issue. Let's say you bought $2,000 worth of Bitcoin on Coinbase, okay? And grew to $10,000 worth of Bitcoin. Yay. And you say, but you know what? In my Robinhood account, I can trade these different tokens or whatever it is I want to trade. So I'm just going to send it over to my Robinhood account. It is not a taxable event, as we talked about earlier. No taxable event. The Coinbase doesn't know that. Coinbase says, oh, you bought it for $2,000. You send it somewhere else. I don't know who to, don't care. It's a taxable event. For $10,000, I'm going to send the IRS a 1099 DA with $8,000 of capital gain. Oh, it gets better. Now, Robinhood receives it. Robinhood says, oh, yay, I got it. Okay. This is income to you because it's a receipt. I don't know where it came from. It didn't. Now I'm going to send, and Robinhood already does this, by the way. Now I'm going to send the IRS a 1099 DA with $10,000 worth of income. So you now have official IRS documents worth $18,000 of taxable income, gains and in regular income, right? So how do you argue with that? Because if you ever get an incorrect W-2 or incorrect 1099, you have to contact the issuer and tell them, hey, it's wrong. Can you fix it, please? Can you imagine contacting Coinbase or Robinhood and saying, can you fix my 1099? And so we also built in a proof that allows us to prove that if they do follow through with it, that our software can prove that these are internal transfers and not.
Ooh, that's good to know. So since there is so many bad products out there, how do you see it evolving in the next, let's say 3 to 5 years? Because crypto's innovating so quickly. And if we already had a bad start, because you said, I think over 50 products out there, and they're majority of them bad.
There's about 14 products. There's more than 14, but 14 of the mostly used products. We audited 53 US CPA and accounting and attorney firms that call themselves crypto tax experts. These products that are our competitors, I guess, at this point, there's about 14 on the market. There's about 4 top movers, 2 that are close to $2 billion valuation, have millions of users, and other, actually the worst. And it is frustrating because I legitimately went to them, and I've had this validated. And don't get me wrong, I had this validated because I said to myself, I said, how can I get this right? I've always been good with numbers. I'm like, but how can I get this right when these billion-dollar companies can?
Right.
There's no way I got this right. And that's why I went all these PhDs from universities. That's why I went and discussed this with tax attorneys. And I went through the algorithms. I went through the details. over and over again for the last 3 years and got it validated, okay, that what I'm doing is right, and went over the products with them and got it validated that what I found is indeed wrong. And yeah, I'm the founder, but a lot of it was a team effort with a lot of people that have stepped up and helped when I asked for it. And I think that's the key. But I think the biggest issue is that the developers took shortcuts, not because it's not the developers' fault. The shortcuts were taken by the founders of the company because of the lack of knowledge within the tax and accounting and cost accounting world and everything, right? That's where the issues stem from ultimately. Then there's some issues when it comes to getting the data from, they're allowing CSV files to be uploaded. CSV files are highly flawed. It does not, you have to get it from the API. You have to get it from the blockchain directly. But then there's also ways to get it incorrectly from the blockchain. So there's a lot like Uniswap, for example. You can trade so many different currencies on one Ethereum address. If that is not integrated right, you do not the whole history. Because you can trade Ethereum for ARP and other currencies, but there's not a new address generated. It's your one address. And so unless you have it set up correctly and you have all the blockchains integrated correctly and you update it correctly, you don't get the. So those are some of the issues as well. And I just want to fix it. Who knows where we're going to get to. We also built out actually a bookkeeping system. So we're threefold, right? We have an individual trader side, and then we have an actual bookkeeping, like a business version. So you can have your trading accounts connected if you trade as a business, but also you have bookkeeping, right? So you can create an actual legitimate profit and loss balance sheet. You get your trades and the details, and all these products, we have an accountant version. So you can invite your accountant to it as well, so they can oversee. So there's a lot of different things that we're doing at a reasonable price, right? I looked at some of the crypto accounting products out there, 15 to 20,000 a year. I'm sorry. It's ludicrous to spend that much. We're just having monthly subscriptions. Yes, there's add-ons, there's different things, depending on how much you need, how much you do. But crypto is just growing. It's not going to go away. So more and more businesses and more people, we have Bitcoin ATMs here and there, more and more places. The Bahamas, Jamaica, they're already allowing you, they have the sand dollar, right? They're allowing you to pay with crypto already in the stores. It's going to help you, but you need actually an accounting system to be able to track that. And you can't have a good accounting system if you have the back end completely inactive. So that's something we try to solve as well.
Awesome. And if there is somebody that is new, overwhelmed, especially when it comes to crypto taxes, what would be like some of the first steps that you would advise them to take?
Keep track of all your addresses.
See, that's another issue, because if you're on multiple chains, you got multiple wallets, even just after talking
Trust
with
me, I have
you,
so many trust wallets and I don't even know how to get into half of them anymore. I know.
that's another issue. So what happens when you forget the password and you're like, you know what, screw it, I'm gonna make a new wallet.
Yep.
Now that wallet's considered in crypto space, and
The thing is, trust wallets, you could technically find, right? You could find the address because at one point or another, you send from your exchange something to your trust wallet, right? And so you could be like, oh yeah, I did send that. And now you have the address, right? And then you integrate the address, right? Now the issue comes if you have a trust wallet and somebody else sends something from a trust wallet or MetaMask then you're like, who knows? And you like lost it and you can't get back in. Keep track of your addresses. Keep track of all your addresses. Trust me, I'm just as bad, and I give advice that I don't even follow myself. Actually, no, that's wrong. My developers are keeping track of my 2,500 wallets and 168 exchanges I have right now. And I had to do this. I had to, because I had to be able to validate data. How could I validate that data is accurate if I don't have those wallets and pull the API and have all the blockchains and pull the data and have all the exchanges and pull data and validate that it's actually the right data coming over? So unfortunately, but I have people who keep track of it for me because.
yeah. And then since we are moving at such a fast pace. Businesses, as far as like accepting crypto payments, you're starting to see a lot of that. I'm pretty sure you're gonna start to see more crypto credit cards. Like I have the Gemini crypto card. It's like I get rewards for suspending. And going forward, how should, I guess, businesses try to keep up with that pace
So
of how things are moving? Because
again, they can't, right? So they can't, they can buy, they can't, they can buy anything that's sent out or comes in. You can keep track of it because you know what you sold and what you received in an exchange. You have a dollar amount associated with it. Anything you send out, for example, that is paying vendors or a fee or something like that, you keep track of and you can write off on your business, obviously. Now, the capital gains part and loss, that's again the issue, right? What is the right? There are some products out there that are offering bookkeeping and have enterprise versions. I have not found them to be very accurate and helpful or costly. They're so expensive, and it makes no sense to me why they're so expensive. It's just
yeah, my only thing could be because they're trying to take advantage of
yes,
people that might be in
no,
crypto
100%.
because they're like, oh, crypto millionaires happen almost every day. It's yeah, for certain people, if you have that type of liquidity on hands, yeah, I get that, but not everybody's in that same category. Some people are still investing only $5 here, $20
No,
here.
100%.
So they're not going to be able to afford, especially if they
No,
hit big
especially
on
small
something.
businesses, influencers, anybody that's paid with crypto. It's like, how can they justify $15,000 to $25,000 a year just on a software that does an accounting? I'm sorry, it's not feasible, and it's just again unfair,
Yeah.
whatever you want to call it.
As far as DeFiTax, where do you see the kind of the company being in like the next near future here? Like say 3 years. Do I see yourselves as being like that trendsetter that's going to have clients just because I'm pretty sure you're working with a lot of clients right now. Down the road, do you guys see being one of those companies that's like really out there that's helping
Honestly,
people too?
I wanted to find a solution, and then I want somebody to take it.
Ah,
I
okay.
wanted to fix it. I wanted to get it right. I want to put everything in there. I want to get it launched. I want to get it. We're doing beta testing right now. Again,
Mhm.
I'm picky. My developers, I drive them crazy because they've been wanting to launch. I was like, nope, got to do some more testing. So we're about probably going to launch in the next 3 weeks or so. We have the wait list up on our website. And like I said, I didn't do this because I was like, oh my God, I want to build a product, millionaire. I built this because I want to fix a problem that I foresee. Okay. That is already here, but more problems that I can foresee in the future. And ultimately, if somebody would come tomorrow and say, I'm going to buy it from you, I would say, got all the algorithms down. I got all the coding down. Everything, we're good. Take it. Right. Because this was not what I meant. I love doing taxes. I love helping people, but I like to do it on a small scale. I like to not work 24/7 every day of the year. I haven't taken a vacation since 2022. I work all the
Ooh.
time. And don't get me wrong, I like what I do. This was a hurdle that I shouldn't have had to overcome because there were so many products out there who could have just fixed their stuff. And they have the resources to fix it as well. And they haven't.
Now, is there a way people can connect with you in case they have any questions? I feel like after this episode, it's very packed. I just
Yes.
a lot of just
No,
different things as far as taxes, even just thinking about it right now, I'm like, wow, I might need to really go look and find all my wallets to make sure that everything's in compliance because I think that's probably a lot of people's minds. You never know if you
a
might
lot
get
of
that.
people will still stick their head into the sand until the audit. And
Right.
then the panic will come. And then there's going to be all the people coming out of the woodworks and trying to take advantage of the people panic. So that's just the concern, right? The concern is how long are you going to ignore it? And listen, even I feel if you used any of the incorrect products, that's great, right? As long as you tried your best to report. Because like I said, I think you shouldn't be penalized for reporting wrong because you've tried your best. I think that's not my biggest issue. The biggest issue, yes, moving forward is the IRS being wrong or you being and having issues there and being defended by the IRS. But I think if you've tried your best, knowing that the SEC, IRS, congressional committees are aware of the problems that these parts, right? They can't really penalize you for trying to do it and not being able to because there's no guidance.
And I'm hoping going forward, since you did give us a lot of good information as far as like with the IRS and how SEC's kind of thinking, I'm hoping it gets a little bit easier because I'm not gonna lie, I'm the type that was just okay. Let me just print my report, send it over, and then it's, hey, what
Yeah, supposed
happened?
to. What were you supposed to do? And like you said, so we have the wait list right now, which is at DeFiTax.us. I have people doing that on Instagram, Facebook, LinkedIn,
Mhm.
social media channels. I don't
Right.
know. I told them to do their thing. You have my contact info, but so that's, I think, the best way to contact us. And I just, again, I just want to make sure that everybody's okay once the audits come back, because obviously end of last year, the publication did come out. They're trying to replace a third of their budget. And so
Right.
something's gonna give. We're consistently in a deficit. And I know let's not talk politics right now. We're consistently in a deficit. We will stay in a deficit. We owe a lot of money. And the only way the government gets money is tariffs and taxes.
Folks, I hope you guys really enjoyed this episode here because, wow, crypto taxes. I know a lot of us don't like that word. Someone feels like I don't know, almost a little bit taboo. You're like, you hear taxes, crypto. You're like, I don't want to do it. But thankfully, Yana Scott's here. You guys are company DeFiTax that's going to help us make this a little bit easier transition because for those of you out there that are really crypto enthusiasts, you guys can understand when you're moving a lot of different money from a lot of different places, it can be frustrating. And I appreciate Yana coming on to our show and really giving us some insight because there's not a lot of people out there right now that's really guiding us and putting us in the right position to know what to do. And I wouldn't want anybody out there that's listening, watching, to go through something where you're like, oh man, this is tough. I got a big old tax bill. I got my crypto that might be getting taken away. So hopefully going forward, we do see some progression in this particular space. As far as Yana, do you have any last words that you like to say to the audience here?
No, just again, we will see what's going to happen. We don't know what's happening tomorrow or the day after. But even with all the hope, I've seen a lot of hope and I hate to crush it again. It doesn't matter if Trump makes any changes to how crypto is being treated in the future. He doesn't change the tax code backwards. It doesn't work that way. So anything prior to whenever he makes a decision on how crypto is supposed to be treated, anything prior to that is still going to be capital gains, capital loss, and government needs money. And that's how they're going to get it.
Good old government, right? Gotta love Uncle Sam and the IRS and all the taxes. Folks, that's going to wrap it up for this episode here on the Welcome Crypto Podcast Show. Hope you guys enjoyed. Make sure you guys stay tuned, subscribe. Podcast is available everywhere, Spotify and Apple platforms as well. Until the next time, I'm your host, Wolf of Crypto. That's Janna Scott, DeFi Tax, and we're out of here. Take care.